Good morning, everyone. It's great to be here at Consensus. I'm going to talk about who wins when assets move on chain. So markets are moving towards 24/7. And the real question isn't whether that happens. The real question is who will win when assets move on chain. Because technology alone doesn't decide the winners. Market structure does. And that's the lens I will be using today, a market maker's lens. So first, who are we? Flow Traders is a global liquidity provider, publicly listed on Euronext under the ticker FLOW. For more than 20 years, we have done one thing consistently well. We keep markets efficient, liquid, and tradable, especially when conditions are not. A few numbers to ground this discussion. We're behind 1 out of every 2 crypto ETF trades in Europe. We trade more than 3 trillion in equities annually and over 1 trillion across fixed income, FX, commodities, and also increasingly so in digital assets. And why does this matter? Because seeing markets at this scale gives you a certain perspective. You start to recognize patterns early, long before they show up in the headlines. And when we look at tokenization today, what we see isn't something entirely new. We see the early shape of a market we've helped build before. So I want to talk about why tokenization is the next chapter. Today, tokenized real-world assets are about 24 billion in AUM. This is tiny if we compare it to the ETF market today. However, the early curve looks very familiar. ETFs also started small, and then they took off for a very simple reason. They made access easier. They standardized the rules. The institutions joined and markets scaled dramatically. These same forces are accelerating tokenization. And the parallels are striking. Both lower barriers and simplify what used to be complex. Both unify fragmented markets, and both rely on transparent, standardized plumbing. Even the mechanics are similar. ETF, creation and redemption, is the same mechanism as in tokens, minting and burning. It's a primary market process designed to keep the underlying instrument in line with the instrument itself. But tokenization also adds something genuinely new to ETFs. Instant settlement, 24/7 trading, programmability, fractionalization, and interoperability across chains and venues. And that combination is powerful. And it explains the momentum we are seeing right now. But this is also where reality kicks in. Here's the friction point, the weekends. Traditional rails pass, funding windows close, settlement cycles stop, yet crypto markets remain open. And that disconnect is exactly where liquidity providers matter. Because if you want US equity exposure on a Sunday afternoon with instant settlement, you need continuous pricing, continuous hedging, and continuous liquidity, while much of the traditional system is offline. And underneath, there's a second, less visible friction: capital efficiency. Most crypto venues rely on pre-funding of quotes. That ties up balance sheet. It raises the cost of liquidity and limits how much institutional skill you can bring in. So let me give an example there. If we need to quote 5,000 US stocks on a crypto venue, and we want to put in a bid of $100,000, we need to put $100,000 on capital aside for one bid. On the offer, we also need 100,000 of that instrument. If you combine all of that, before even starting trading, we would need to pre-fund about $1 billion in capital, 500 million in dollars and 500 million in the different stocks. Those economics at the moment don't work. So the constraint today isn't demand, not even technology, but it's whether market structure and capital models can support liquidity around the clock. This is familiar territory for us. Flow traders already prices ETFs globally and continuously. We already operate across centralized exchanges, OTC and DeFi, and bringing price discovery between traditional finance and tokens, even when the rest of the financial system is asleep, is a natural extension of what we have been doing for over 2 decades. And this brings us to the real question: how do these markets scale? From our experience, markets don't scale because of one breakthrough. They scale when 3 pillars align. First of all, product, a trusted structure, clear exposure, and real product market fit. Second of all, distribution, platforms, exchanges, regulatory alignment, and real users. And third of all, liquidity, tight spreads, real depth, and reliable 24/7 availability. You can't skip these steps, and you can't fake liquidity. This is exactly how ETFs scaled, and it is how tokenization will scale too. So when we zoom out, our conviction is simple. Tokenization is the next ETF moment. Not because of hype, but because it solves real frictions around access, settlement, and trading. But just like ETFs, the winners won't be decided by who launches first. They will be decided by who delivers reliable liquidity, who builds capital-efficient infrastructure, and who earns the trust at an institutional scale. And that's exactly what this panel will be about. I'm looking forward to unpacking how distribution, liquidity, and market structure decides who really wins when assets move on chain. Thank you very much, and I would like to invite up our panel.
Yes, well, welcome everyone. I feel like this is panel 542 about tokenization, but I will promise you we save the best for last. I have some great panelists with me. Thank you for coming, and thanks for everyone attending. A bit about myself. My name is Hein Tibosch. I've been a flow trader for over 16 years. Spent most of my career as a trader, both on the digital asset side as a traditional side. Currently based in Europe, but I've also been on Wall Street for 10 years. My panelists, ladies first, Alex Zhao, Head of Digital Assets at CSOP. Then Rania Rahardja, who is APAC Director at Ondo, and John D'Agostino, who's Head of Strategy for Institutional at Coinbase. Thanks everyone for coming. Maybe to jump right in, like from your company's perspective, maybe start with you, Alex. As like a very significant ETF issuer in Asia, how do you look at tokenization? What will it bring to you? Is it about distribution? Is it about technology? Can you shine a bit of light on how you see tokenization from your angle?
Yeah, sure. Thank you for the question. So I think tokenization now is one of the major trends happening globally, also in Asia as well. Many of the asset managers and ETF issuers are working on it. And this is quite important because we see it as a technology uplift, which helps with both efficiency, liquidity, and also trading. So for now, at this moment, CSOP is also layman's focus on tokenization, and we do have an initiative to tokenize our existing ETF first in Hong Kong, and then we're thinking about globally as well.
Yeah, very excited to see what's going to happen there. Rania, from your point of view, like I think Ondo is, of course, you're in the forefront of innovation from like a more crypto-native point of view. Which area, because I think Ondo does a lot of different things, what do you think is the most top of mind for you currently?
Yeah, so thank you for having us. For those who don't know, Ondo Finance, we are considered a leader in the RWA space. We are the first and the largest issuer of tokenized US Treasury bills. We also recently launched tokenized public equities, i.e. US stocks and single ETFs, and combined together we have about 2.5 billion in TVL. So kind of for us, it's always been about the issue of solving the problem of accessibility. How can we actually democratize access to these high quality financial products, especially to users who don't typically have access to them, i.e. potentially emerging markets or a lot of those here, our neighbors, even in Southeast Asia. And for us, I think tokenization has been a big trend. It's a buzzword that everyone's been talking about for the last year. But we actually don't think that everything can and should be tokenized. At least the way we think about it is only the assets that have proven demand and high liquidity in the real world, we actually will want to bring them on chain, because we can actually enable users to do more with them, i.e. capital and operational efficiencies. So bring about benefits more than just accessibility, but that users can do more with their products, i.e. the borrowing and lending cases that we typically see in DeFi, but now you can do that with your US stocks and ETFs. And this has proven to be quite well for us. As I said, 4 to 5 months since launch, we are now live on 3 chains, close to 600 million in TBL, and can't wait for the first billion.
Then finally, John, Coinbase, of course, you guys are like one of the biggest players in the space. What do you believe is your main edge when you talk about tokenization?
Well, first of all, I want to thank the audience for having the discipline to not get that last bottle of wine last night. So the fact that you're all here is wonderful. So I think, look, I agree wholeheartedly that the phrase "everything will be tokenized" is highly misleading. No different from saying everything will be securitized, right? So there's certain, tokenization isn't some magic marketing gimmick that suddenly turns illiquid assets into liquid assets. It can do something. There are a fringe level of assets where the bid-ask spread is narrow, but a little bit wider than the cost of that transaction. And if you decrease the cost through tokenization, you can create a market-making opportunity. So some assets on the fringe will become liquid that weren't. But why would you take a securitized asset that trades like water, and why would you tokenize it? The issue is going to be, fractionalization is marginally helpful because securitization already solves fractionalization component. The issue is really going to be margin financing. So if, as Coinbase has publicly stated, we want to become the everything app. The problem with everything being traded on one platform is there's moderate efficiencies of liquidity pools, but really what you're looking for is margin efficiency, right? So I'm able to offset my long Bitcoin position with my short gold position. No one historically has figured that out. If you start to put everything on the same fungible platform, you start to get the ability to do the math to allow for those trades to that margin offset to happen, and that's when things become really, really transformational. So your colleague was on stage talking about the massive potential efficiencies in margin utilization. If we get to a world, and this is where I think Coinbase has an edge, because we have the scale and ability to tokenize multiple assets and pull in users across all of those different classes of assets. If we can figure out the margin math, then you take a market that's trading $1 trillion a day and you potentially quadruple it or septuple it. Otherwise, you're talking about, I think, marginal increases in efficiency.
Okay, thanks. So I think to your point, like in the end, but Coinbase is one exchange, one venue. There's a lot of these, right? And it's also, I think, for an issuer like both like Ondo and CSOP, there's so many different venues to try to be active on. How do you try to solve for that? Because like Coinbase might solve it by themselves, but still, there's like maybe 50 other ones in the world.
So we try to work with as many distribution partners as possible. Right now, majority of our partners are actually based in Asia because the nature of our product cannot be sold in the US or to US persons and subject to certain jurisdictional prohibitions, i.e. professional investors in Hong Kong. And the truth is, we want to give our partners the best kind of experience for their users. One kind of unique way, and I think what sets us apart from potentially the competition, is our very unique just-in-time liquidity model, i.e. I think earlier in the panel, in the keynote, it was mentioned that on-chain solves this problem that traditional markets currently face. It's just 24/5. But I would argue that we actually bring on the benefits that we actually can see in the traditional markets, i.e. the real depth and liquidity of the NYSE and the NASDAQ, and we can actually mirror that and bring them on chain, such that when our users place an order with us during the market open hours, we can actually purchase the asset in the real and bring it on chain instantly, such that the prices will never be pegged from the underlying asset. And this kind of user experience has proven to be very good. With our various partners then, it's actually up to them to design the kind of localized campaigns that work best for their users. They know their users in the different markets and jurisdictions and behavior best, what incentivizes them, what kind of assets they like to purchase. So we leave it up to them to kind of really kind of go with it to see which one works best. And yeah, currently that has been working well.
And as an ETF issuer, how do you look at this? Because you have the distribution from like the local exchanges. Like, how do you look in the crypto space? How to solve you cannot spray and pray basically, because I think of the reasons that Marc already indicated.
So the tokenization in Hong Kong right now, the distribution channel are the local virtual asset trading platforms and also broker dealers. After we do the tokenization, we'll likely to work with the major ones. And I think there definitely is an issue about the separate liquidity. But what we do is that we will want to work closely with the market maker and also concentrate the liquidity on several of the major exchanges. And also in the meantime, because we do have a lot of products that is highly liquid with our ETF version. For example, in Hong Kong, the most traded ETP product on Hong Kong Stock Exchange, among the top 10 of them, 5 to 7 of them are our product. So we do have a very deep understanding about the liquidity, and I think that's something we can be borrowing that to the tokenized version as well.
So I think it's interesting, like you have the product, like people are familiar with the product, like Coinbase has a distribution, but if you think about the tokenized assets that you could potentially list, you also mentioned like not everything, you don't need to tokenize everything. Like what comes first to mind to basically expand your reach?
So I was really wrong on this. So a couple of years ago, I was asked the same question, and we were getting approached all the time about tokenizing things like crude oil and gold and whatnot. And my thinking was, and I used to be head of strategy of the world's largest commodities exchange, the New York Mercantile Exchange. And my thinking back then was, why on earth would we tokenize gold or tokenize crude oil? It already trades like water, futures work fine. Let's focus on the stuff that's not working. But that goes directly against what I just said before, which is tokenization isn't some magic bean that just magically makes things that people don't want to buy into things people want to buy. So I actually think it's going to be the slow transition of very, very popular assets onto tokenized form. Now, again, why would people do that when futures are highly efficient, there's implicit leverage and sell, the answer is going to be 24/7 trading and cross-margin utilization. That's one bucket, is attack the high liquidity products and get people comfortable with transacting on chain. The other piece is going to be like we did the Monad distribution, which was if I were investment banks, I'd be scared to death of what we accomplished with that Monad distribution. In less than 14 business days, we raised $270 million in, I want to get this right, I think 14 countries across 70,000 individual users. Monad was a great project, but it wasn't, a globally known brand name. And we did that, for the effective underwriting cost of about one-tenth what it would cost them to hire a bank to do it. So I think you have your barbell. You have illiquid, high-quality deals like Monad, maybe aren't as well known, and then very, very well-known assets to train institutional investors and retail to prefer tokenization to listed futures and securities markets. And it's going to be a challenge. It's going to be tougher than people think. In crypto, we think we built a better mousetrap, and they may have, but getting the inertia of getting people off that system they know is extremely challenging, even with a better mousetrap.
And I think you talked about the capital, which is like top of mind for us. I think we have different presentation. Like for Ondo, you have a lot of very interesting products. How do you see this? Like how would you see the ideal future look like? Because you would be listed on all these different places. There's challenges. How do you look at that?
Yeah, I think the way we see this whole RWA space is US dollar via stablecoin was the first product to really have product market fit. Now we're 100 billion in circulating supply. I think most people may not actually realize that. They think that tokenized treasury is actually the kind of the innovative and first RWA. It's not true. Stablecoins are here way before. And I've been out like 2 years ago. This market has, I think, more than tenfold from about 2 billion in market cap right now 20. Tokenized equities as a category just surpassed 1B, but this is just still a very small fraction on what this market is, this trillion-dollar asset class in the real world. So we think there's a lot of room and potential to grow. And I agree with what John just actually said. A lot of it is still about education. People still don't sometimes understand why do they need to buy tokenized form of equities when they can buy them in the real world. It's really down to the things I just mentioned earlier, the accessibility, the capital and operational efficiencies. And I think once people get more comfortable with all these highly liquid asset classes that have a lot of demand in the real world, start actually being more comfortable and exploring more sorts of asset classes that might come on chain, be it illiquid products, be it more structured financial products. But I think at least in the short term or near term, we anticipate a lot more growth still in this public equities class that Ondo has been doubling down on.
Then, if you think about like the TradFi world versus the crypto world, you see in TradFi you see like a strong push, like you see in the US, you see DC pilot, like equities coming on chain. All across the world, like there's pilots going on in the traditional world. Banks are trying to make sure they're up to speed. How do you see this push? Maybe I think from a Coinbase perspective, you already mentioned like you want to be the number one, sort of the all-in-one app basically. But if you think about the traditional world, what do you think are the most like is it threats that they could like if they would move on the chain? What kind of things do you face there?
That's right. I got a lot of people when NICE and NASDAQ announced their permutations of tokenized trading, phone calls saying, "Oh, is this threatening to Coinbase?" I mean, on the surface, yes. Based on my history, I think the project of getting the average investor, whether it's institutional or retail, to be comfortable with tokenized trading is such a massive lift. I want their help because I know that once they help me transition, I think we'll win. Because I don't think they're going to be as capable of servicing that investor as we will. So I'm happy that they're doing that. I think it's fascinating that they're choosing to do it. And a lot of folks in crypto have been like kind of dismissive because it's a private chain or they're doing it like parallel after hours. But I think it's really extraordinary. And I think the irony of all this is and I've spoken to both those groups, the reason they're now comfortable with launching tokenized equities trading is irony of all ironies, it's meme coins. And we all kind of, people have different views of meme coins, but when you would read about some kind of silly meme coin gaining and losing $1 billion of value over the weekend, the words that should have popped out at you were billions of dollars and over the weekend. And when that happened dozens and dozens of times, the resiliency of those chains, like Solana, were proven. And having come from the traditional exchange background, you need 99.99999% uptime. So meme coins, just like cat videos prove the resiliency of the piping of YouTube, meme coins prove the resiliency of blockchains. And yes, they're using private chains for now, but I think that's a great win, and I'm happy to have the competition because I need those old school players to help me convince the world to get on chain.
And maybe like give a regional perspective in Hong Kong. How do you see sort of the TradFi versus crypto push-pull? I think Hong Kong is also things are happening here. Can you shine a bit of light on what's happening here?
Yeah, sure. I think in the regulated space in Hong Kong, the secondary liquidity will likely be happening within the local VTPs. And people will ask, when people can buy your product already on Hong Kong Exchange, why are they buying it through the broker-dealer, the tokenized version, right? I think the main thing is that in this, at this time, we also see the development of the local regulated stablecoin issue likely to be early this year soon. And after the stablecoin is issued, they're likely, the banks who are issuing the stablecoins will need to promote the stablecoin, and people will have something that they need to buy. I think the use case will likely first to be working in parallel with the local stablecoin development. And the offshore space, the DeFi space is definitely very innovative and very exciting, and it solves the issues like accessibility, and we do see it very promising as well. But for the regulated space, I think the main advantage is that the big banks, the big capital are more comfortable getting into the space because they know that there's enough risk management underlying. So the two spaces are all both very exciting.
So it's interesting that because of the stablecoins, like there's a good reason to promote tokenized versions of to at least like get stablecoin adoption locally. In Singapore, how do you look at this?
More from an Ondo perspective, actually, we really welcome more traditional banks and asset managers coming in this space. The way we've actually always seen ourselves is actually the bridge between these traditional financial players as well as the crypto natives. So the asset managers are more of potentially the providers, the issuers of these assets. We help them understand what crypto native users want and distribute it. I think another way I think that's very innovative in how we work with traditional financials player is a pilot that we actually did with JP Morgan, Kinexys, as well as MasterCard, in which we enable users to instantly convert their on-chain tokenized treasuries, our institutional product, straight into fiat in their bank account. And currently, we can do this very seamlessly on-chain, to USDT, USDT, all the stable coins, instantly 24/7. But being able to convert that seamlessly into fiat is still not something that's widely explored yet. And this is one way we can actually utilize the expertise of our traditional banking partners in helping us fulfill this.
And if you think about, I think you already mentioned about, I think one of the big added benefits of tokenization is how you can broker the unbrokered, which can mean when you're somewhere in the Western Sahara, in theory, you could buy like Apple, but also if you're based somewhere in a developed country, you could have access to financial instruments that you wouldn't have access to in a normal world. Maybe like at Coinbase, let's say we talk about private debt, maybe pre-IPO, like how do you look at these kind of offerings? Is it something that's you see in place?
I love the first thing you said. I don't love the second, meaning, so I'll start with the latter. Like, I don't love the term democratization of finance. Like, I do find it sometimes used by people who are selling bad product. Like, in my mind, sometimes when people talk about democratizing finance, it's code for, I can't find anyone else to buy my product, so I want to like foist it onto a less informed retail. But I love the first thing you said. Like, I have a dream, and this isn't a real thing that I'm working on right now. I hope to someday. My dream, as someone who is American citizen, I love my country, I would love to see a tokenized version of the S&P 500 that anyone in the world who's managed to scrape together $5 of value could quickly and easily, with de minimis, low-friction AML, invest in the growth engine that is the U.S. economy. And I think that we should bend over backwards to make that happen, because I can't think of a better marketing program for any country, in this case mine, where everyone in the world who's betting on their future would bet on that economic engine. I want everyone to have $5 in the S&P 500 everywhere in the world on their phone tokenized. Like that is a game-changing, change the world crypto vision. My hedge fund hasn't beat the S&P in 10 years, and no one else will invest in it, so I'm going to tokenize it as a gimmick and push it onto a low information investor. Not so much. Tokenization, quite frankly, has had a bit of a garbage in, garbage out problem. And so I want to focus on really, really high impact projects with really, really high quality underlying assets.
Public equity.
I think we can agree. Like, how do you look at it from an Ondo perspective?
Yeah.
Because in theory, you could help anyone. Like, of course, there's a garbage like hedge funds, but you could also think about.
No, not all hedge funds are garbage. I'm just saying, don't use tokenization as a gimmick, and don't push bad product onto people who are willing to be at the cutting edge of innovation and take on a new technology like tokenized assets.
Yeah, agree. Not everything should be tokenized.
But is it for you? Like, of course, like I think tokenized equities is now more top of mind. How do you look at it?
By the way, we're so good they added time. I've never seen that before.
I feel like it's constantly going up and up and up.
They just tacked on 5 more minutes. So I hope you guys like us. We're going to be here all day.
Sorry, what's the question?
Yeah, no, I think for Ondo, is this something that you want to do, that you're considering? Like, of course, to your point like about the hedge funds, but I think there's some instruments I would like as an investor to have access to. Like, how do you look at that part?
Yeah, so agree with John, right? Not everything should be tokenized. We really focus on assets that are highly liquid, that have proven real demand. Interesting about the S&P, that's actually one of our top traded and performing assets. Users really like that. So users, outside the US really want that. Of course, in places like Hong Kong, subject to professional investors only. So I think our narrative has always been very clear in that sense. First, US Treasuries, and now public equities, focusing on single stocks and ETFs. Of course, we're always bringing what users actually want to them, be it capital, operational efficiency, or accessibility. And right now, I think we've had a few partners asking whether we'll be looking to tokenize European stocks, Asian stocks, and that's definitely something that we're actively looking at. So.
Yes, for us, I think we have very special offering for the market, because as an ETF issuer in Hong Kong, what we are able to do is that we are able to aggregate many premium assets in Asia, especially the market asset in restricted market. An example is that one of our ETF is 2x SK Hynix, which is, I think, the only one in the world right now, and it's a highly liquid, so much trading volume, and I think what we can do is that in the ETF version, we already lower the access to those restricted market, and in the tokenized version, we can even bring these type of premium Asia assets to even a global version of the distribution channels, and this should be interesting.
Maybe, like you mentioned, like innovation, like when we talk about Coinbase, I think it's sort of you want to be a vertically integrated system. Of course, in the traditional space, it's more separated. What are the two tensions that you see in the end, if you're not a Coinbase customer? Like, how could you see the tension between the vertically integrated world versus the separate functions? Because in the end, you're exposed to Coinbase, basically.
Yeah, I mean, I have a personal view that it depends what you're integrating, right? So there's things we aren't integrating. So for example, we don't have a market maker that controls 60% of our liquidity, like a very famous exchange that went bankrupt some time ago, right? That's a bad idea. Exchanges are price discovery mechanisms. You cannot be a price taker and a price maker in the same system. So I never understood that. I remember back in those days, I was like, oh, this model works. I'm like, it's like a lawyer representing both sides of the case, right? So I never understood how it's possible. So I would not be at Coinbase if that was our business model. The notion of custodial services and trading services in one entity, I don't see an issue with that. Who knows where the regulations will go over time. But I think you can always choose to diversify your risk across trading and custody if you choose to. But I think having the option, there's significant advantages to financial advantages to having the custodial service and trading services in one place, and some people will avail themselves of that, and others will say, no, I want to diversify my risk away. So I think vertical integration of certain functions is okay. Vertical integrations of functions that are juxtaposed to each other, like again, they're supposed to be checks and balances between the market making side and the price discovery side, that I would never be comfortable with.
If you think about on the Ondo side, you see the TradFi is also trying to close in, basically. How do you think you can still stay ahead? Because I think you were the first ones. Like, what do you think is your edge for the longer term?
Yeah, so I think one thing that's really great about Ondo is we're constantly innovating. Not only are we the first issuer of tokenized treasury bills, we were the first to come out with a concept of repo, i.e. flux protocol, in which users could actually deposit these tokenized treasuries and borrow out stable coins. And back in those days when the yields on DeFi are actually lower than that of the T-bill rates, user could do with this looping strategy. And since then, we've obviously innovated in coming out with the provider of tokenized equities. We were the first to think of this just-in-time liquidity model in which our prices on chain can mirror that of the underlying without the need of on-chain market makers. But of course, we would still need market makers like our flow traders if we want to give our users 24/7. But just in a 24/5 model and ensuring the best execution prices, we're the first to do this model. With kind of, I guess, regards to kind of what is next, we recently announced Ondo Global Listings in our Ondo Summit last week. What this actually means is whenever a stock goes IPO in the US, like the case with BitGo, we were actually able to mirror that and offer the tokenized stock version 15 minutes just after they rang the bell. And this actually means users can buy the tokenized form pretty much instantly. So there are talks of SpaceX, many other companies about to go IPO. We're closely monitoring that in order to mirror that on chain almost immediately. So I think one thing is the space and industry obviously move and changes really fast, but we're constantly innovating and adapting. On top of the Ondo global listings, we also announced Ondo Perps. That is something that we're launching in the next couple of months.
And then, I don't think we haven't talked about DeFi yet, and I think DeFi is a bit less, maybe underrepresented at Consensus. How do you see sort of the DeFi versus the the CeFi? I would say the push-pull, with the TradFi versus crypto, but DeFi, how do you see that play out basically in the longer run for innovation-wise? From your
I never understood the tension between the two. I'm old enough to remember traditional markets have DeFi. It's called OTC. So you've got listed futures listed spot market, and then depending on whether it's equities or commodities, you have anywhere from a 6 to 12 times larger OTC market, which is just peer-to-peer. That's it. I mean, before there was blockchains, there were guys on phones matching OTC trades. And it's always been multiples larger than the spot market. And the two work very, very well together. There are checks and balances to each other, particularly for assets like commodities that are physically delivered. So I think OTC markets or DeFi markets complement, do not compete with centralized markets. There are going to be investors, particularly on the institutional side, that will always have to use centralized venues. That's just how, from a regulatory perspective, they have to operate at least a portion of their liquidity in centralized venues. There's going to be retail investors that are tangential crypto native that will be more comfortable with centralized venues. That doesn't mean DeFi cannot and should not exist. It's like self-custodial versus centralized custodial. I think it's wonderful that crypto has the option for self-custodial. I would never want to see that go away. It's endemic to what makes crypto crypto. But a lot of people would prefer a centralized custodian. The two are not opposite, they're complementary. So without a very, very large thriving DeFi market, centralized markets won't be sustainable and grow.
So then when we're finishing up, I think the standard question you always get, look in a crystal ball, what's going to happen? And I know we all agree there's only winners on this side, probably also in the audience. But who are the unlikely winners, in a few years from now? There's a lot happening. Maybe starting from you. What do you think, Alex? Who's the unlikely winner of the whole tokenization world? That's evolution that's happening in the coming years.
Yeah. So for tokenization, there's a focus on access, and there's also focus on product as well. For the asset manager perspective, what we excel is asset selection, asset manufacturing, and that's what we are gonna keep doing. First in the ETF version, of course, and then in tokenized version. I think with the capability to continue produce the premium product, we are stand to win.
I think for us, it's just about the player who can come up with a product that users want in a, of course, regulatory compliant and a risk-controlled fashion. That's always been kind of the playbook of what we've done and proven successful to date. Yeah, the one thing I really do have to add on, and why I actually think RWAs are so unique in this space, is kind of related to the earlier question about the DeFi utility. I think RWAs are the only product to date, actually, that can combine the benefits we see in traditional finance, like bankruptcy remote protection, in which holders of our assets actually have a direct claim to the underlying, but also have a permissionless nature of the product that can be used for borrowing and lending in DeFi. And this is what I think makes it really unique and stand out.
I'm going to give the answer that my comms team is going to love. The American consumer wins ultimately with tokenization, specifically around, I think once we get through all the drama in the US with the Clarity Act and we put a good bill in place, you're going to see American consumers, almost like that overnight, have the optionality to increase the interest or the rewards that they get in return for their money market holdings by 6x, 7x, right away. So I mean, that's a compounded over the lifetime of a young investor. That's extraordinary, right? That's their kids' schooling. That's retirement savings. So I think ultimately You have these really, really big fat fees that are being taken by centralized entities that will start to be open to more competition, and ultimately the consumer is the beneficiary.
Well, I think that's a great one to close this panel off. Yeah, thank you for being here. I hope you all enjoyed it. We didn't make it until lunch. Sorry for that, but thank you.
Thank you.